A very good morning to everybody. Busy morning today. Lots of data, lots of moves, lots of central bank squawkers coming out. Hope you're doing well. Morning, Kay. Right, everyone hear me okay?
Yeah, we hear you.
Cool, fantastic. So yeah, we'll have a quick rundown of some bits and pieces, the usual coverage of what's gone on overnight and this morning. Then we'll get stuck into all the price action that's gone on. Quick look there at the expiries, which you can see. This is from the ForexAnalytix platform that I put up usually the night before or first thing in the morning. Not a lot really going on today in the expiries. Mainly the big figures for dollar yen, euro dollar, a little bit around the 107s down to the low mid 106s, 947 there, 952 there. But really not a lot else going on. Kiwi 65, got a little bit there going off, but keep an eye on that one. Just having a look, see where we are in a Kiwi. In fact, 64.35 at the moment, so not too far off of that. Obviously, the RBNZ coming into focus there. Dollar CAD, not really an awful lot going there, and neither for a lot of the rest. Euro, Swedish, 10.52, got a little bit going there. It's unusual to see something so big going on there. Again, not too far off the number, 10.49, 10.50 at the moment. So one to keep an eye on later there. So let's jump into the data quickly. PMI day today over here and everywhere. We're going through the numbers. Australia kicking off there with numbers coming in a little bit lower for services and manufacturing. It's been the general theme in the PMIs all over, but there have been little discrepancies. We can see there from Japan, lower in manufacturing, but a tick up in services. If we come down through to Europe, let's get rid of that old geezer over there. France, again, both coming in a little lower. None of these numbers are hugely moving, considering everything that's going on, but we need to keep an eye on the trend here now. As we've been talking about, are we going to start to see the effects of rate hikes or even threatened rate hikes starting to impact things, particularly from Germany? One of the notes that came out alongside the PMI data there was that supply chains are now impacting demand. And we got a sniff of that from the IFO yesterday. And it's something that I've been banging on about for a while when talking about the fundamentals and the economy is how long can firms and businesses survive tightening supply chains before the demand from their customers drop? Because if they can't get goods out the door, there's only a finite amount that customers will order if they're not getting filled on their backlogs. You know, there's not a never-ending cash pool. If the end user can't sell to their customers, demand is going to drop, and when that happens, that means that even though real demand is still there, people want to buy stuff, people still want to produce stuff, if they can't physically do it, it's going to impact activity. And we've seen that in evidence in the German PMIs this morning. So Germany there, we saw a beat of expectations for manufacturing, but we saw a dip in services, so it's gone the other way there. But even though that was a better number, we did get this note in the comments saying that demand is being impacted by a supply chain. So this is something that we're going to be looking at going forward and see whether it crimps activity. The Eurozone as a whole, it's made up of all the other numbers, if you like, so it's more of a composite, if you like. Again, showing a little bit of weakness there in both the manufacturing and the services. The big shot this morning was the UK. We know it's doom and gloom times over here apparently, and everything is going to shit in a handcart, and that's what we saw in the numbers. manufacturing losing there, but the big drop in the services, which is the big component for the UK, you know, it's the bulk of the UK's economic activity, dropping to 51.8 from 58.9, you know, huge miss of expectations there, and puts it just above the contraction mark, which is the 50 level. That obviously caught the pound on the hop, and we've seen a big drop there. It was up, sort of still tickling 126, and now it's back down through 125. So we'll have a look at that in a moment. Just carrying on through the calendar, little data shortly. The CBI industrial trade survey. We'll see whether this is an industry number, manufacturing number. We'll see whether that's going to look to sink like the PMIs. Not a lot out in the rest of the market there this morning. Then we go into the US, and we'll get the first market manufacturing for the US there, and we get the new home sales numbers, and then we get another minor manufacturing index from the Richmond. So it could be a case of seeing whether the manufacturing is going to have the same effect in the US. We've seen the Empire State, we've seen the Philly Fed, both producing poor numbers. This is more mainstream. This is the bigger set of numbers. Are we starting to see the impact coming through there? That'll be something to watch. New home sales, as we've been pointing out, we've seen weakness there too via the NBA for months. We've also seen that in the recent two housing datas, the buildings permits and starts, and also the existing home sales. Now we get new home sales. Again, we're going to see if the housing market is looking a little bit tepid there. So overall, the theme that we're looking at for all these fundamentals is really matching the data off against the central bank expectations. We know what the Fed is doing. We know what the path they've set themselves. And now the market will be guessing and second guessing via the data, questioning whether the Fed is going to be right, whether they're going to have to do more, or whether they're going to potentially have to do less. And that's what the market is going to jump around on now. So the data has grown in greater significance now than it has before in terms of price reaction we may get around the data points. And as I say, you've only got to look at cable for that one. There's not really been much news otherwise coming out overnight. Obviously, everyone knows about the SNAP guidance coming out and saying that all their numbers are likely to come below the lower end of their prior expectations. That's been a knock for tech stocks. We saw, I think Snap was down something like 30% after the close yesterday. That's hit things like the NASDAQ. We'll need to see what the follow through is going to be in the US stocks at the moment. Stock futures, at least, looking a bit hairy. Just going to quick look at the chart there. So we can see the NASDAQ there. That's when that announcement came out. Big crunching candle there. And it's not looked to bounce since, so we'll see where that goes on. We had one Fed head out overnight, Fed George, saying that she's watching the market functioning in the summer and into autumn, and it will be important. And I'm wondering if that's a nod indeed to stock markets. A lot of made is of the Fed keeping an eye on stock markets to see how their policies are affecting things there. So that could be a nod to stocks that they're going to see how these rate hikes over the next few months are going to impact markets. She'll probably say she's talking more of the financial stability standpoint, liquidity, things like that. But there'll be conclusions inferred from that. Now, the big news this morning was another key comment from Lagarde. Yesterday, if you remember, we had that comment that she pretty much set out that they'll be hiking in July and September. She said that negative rates will end by the end of Q3. Now, at negative 0.5% at the moment, that means they've got 2 meetings to get rates to zero. So that gave the euro a little lift, and it was her finally putting some significant comments to that and pretty much nailing down the numbers. Now, this morning she's come out and she says that she expects rates now to be positive after Q3. So yesterday she's taken rates back to zero. Today she's taking rates above zero after Q3. It's not really a massive comment in terms of, yeah, we expect to hike 25, 50 pips, anything like that. But sometimes all it takes is these key language shifts from the main people at central banks, and then you get your moves again. And that's exactly what we've seen in the euro. There it is, clear as a nose on your face. But that's not been the end of it, because as much as the market's taken that as a hawkish shift, that at the minimum we're getting 3 hikes this year, the very minimum. The market is obviously going to be pricing more. ECB's Vilroy then came out and he started talking again that 50 pips hikes aren't the ECB consensus. So he's bringing those expectations down a bit. The other key line he said is that he expects a neutral rate of between 1 and 2%. Again, this is something we keep talking about, the neutral rate, where central bankers feel that rates need to be comfortable, where they need to settle, where they'll be happy for them to settle, for the market to be comfortable, and for them to be comfortable, and the economy to be comfortable. The Fed are looking at probably 2.5, maybe a bit higher. He set his stall out at 1 to 2%, which is probably a little bit lower than what perhaps the market is thinking. And it was directly after he said those comments that we saw this pullback from the highs in euro dollar. So though we got the Lagarde being a little bit more hawkish, we've still got the others coming out and taking some of the wind out of that and setting the market a bit lower, that, you know, they're not looking at 3, 4, 5% hikes. They're not looking at getting into the same type of situation as the US, of which these ECB bods have made it clear they don't feel they're in the same type of situation as the US. So now we've got the market again repricing the expectations. They're now getting the pricing for the hikes, and then trying to set a level of where those hikes might start to pause. So for the ECB, if we just take Vilroy at his word, it's around 1 to 2%, which isn't really a lot. That effectively gives us maybe 4 or 5 hikes this year, and then maybe drawing into something next year. If they hike 4 times 25 pips, that would get their deposit rate up to 0.5%. So maybe another 1 or 2 on top of that. But also, is it going to be the deposit rate that goes further up, or will they start nudging into the main rate, which is currently at 0? So if they want to get the main rate to 1.2%, they've got to have, you know, several hikes there. So June is all going to be about how they set the path for future hikes. If they want a 1.1 to 2% neutral rate, how long are they going to do it over? Is it going to be 1, 2, 3 years? And we likely know that they're not going to be super hawkish about this, so they probably will drag it out. And from that, the market will ascertain whether this is going to be a hawkish June meeting or less hawkish. And that will be reflected in the levels for the euro. But for now, we've had the break in euro dollar. We looked at the chart yesterday, and as we do every day, my main next level is up here around about this fib and the 108 level. But we have pretty much, give or take, matched this prior high here around the 107.30s. So that's a consideration to keep an eye on, just in the short term at least. But if we get a break above this 107 highs, 107.87, 108 level, we've then got this big long trend line to deal with, which comes in way back there from sort of 2017, late 2016, I think, 2017. So that's what the Techers is looking like for there. It's still, as I've mentioned before, still fairly small steps, and this still doesn't look like a central bank that's just about to begin a full-on hike cycle. We're still trading at very low levels, but as we've seen today, it doesn't take much, only a few comments and the sentiment changes, and we've seen the sentiment change pretty much since the lows down here. We've been gearing up for the ECB to change their tune. They've done that now. We know where the Fed's at, so there's it's pretty low how much the Fed can squeeze out to be more hawkish unless we get some huge upside surprise to inflation that no one was aware of. So the worm has turned, and as we mentioned for the last week or so, euro dollar is going to be a dip buy rather than a rally sell. But if you are going to try and fight the move in the moment, pick your levels. That fib could be 108 is probably going to be a pretty solid level if we get up there. If you want to try and counter trade, that's where you want to look. In the meantime, we want to see if this 107 is going to hold. Probably draw that down to the 106.90 area. If it gets under 106.90, that's going to take probably a lot of the steam out. And then the level under there is down here at 106.60. But while it holds 107, it's going to keep this bullish momentum going. And for all intents and purposes, we perhaps are going to see another push higher. Kay, you got any thoughts on Madame Lagarde?
Hi everybody. The change in tone is pretty clear. So the ECB is now starting a bit like the Fed did. When was it? Like May, June last year. Exactly the same period. Actually, they're starting to turn jacket. So the market needs to reprice the ECB, which is in the process of. And also what I've been saying like a while back, just before the half May, I was saying like if there is any chance for the dollar to weaken a bit from lofty levels, it's the second half of May into the start of June, where we are going to have the next rate hike, QT starting, where the market will need to assess what the QT actually means live instead of anticipating it. So yeah, I think this euro move, as you were pointing at the big level around 108, I think now it's like the prior low 106.40, the break level, and then the 108 figure 30. I think that's where we are now going to probably walk around in this zone for a while. Possible test of the 108 and a quarter, I'd say. But then we will have to see what's really going on, because we can't forget that the ECB will hike at a slower pace than the Fed will hike.
Yeah,
Lagarde said something really interesting and correct for newer traders, which is important to know, is that the European, the old continent, usually moves slower than the US. The US is a much more dynamic economy, so the ECB will always move a bit slower than the Fed. But undeniably, euro is in demand. People need to rebalance or reassess what's going on now. We've seen this in the euro sterling in a pretty big way, breaking through that little range we were trading just sub 85. It went like a 1% without even looking back, right? So I think the repricing of the euro is now really underway. I mean, the rebalancing of euro portfolios, let's put it that way. I still think 108 figure 30 is going to be the nut to crack. If not, we'll still be overall in a negative euro dollar scenario on the more medium term.
Yeah, I think it's going to be a summer of collecting nuts to crack. Just looking at the chart there, like you say, 108. I know 108.30 is an old time level. Goes way back. If you look at the charts on something like a weekly, a big level that I traded way back 2016, 2017. Last time I was buying euro down here. That's always going to feature. And just look at the chart there, we get up to 109.40. Again, that was a big level not so long ago. We tested up there this year, and we got a big break, got a couple of false breaks below. Then it held, and then we got a decent break, and it doesn't get much clearer than that when the level breaks and becomes resistance. So lots of nuts need cracking in the weeks ahead if the euro is going to climb higher.
It's been really creating a lot of resistance levels when it came off, right? I mean, now we've broken
Yeah.
through the 106.40. Then now we are looking at probably your 107 even and a quarter, 25.35. Then you're looking at 107.60s, then 108s. I mean, there's a lot of levels to chew through, and I'm not sure that after the rebalancing of portfolios that they are going to do now to cut back on heavy euro shorts, I'm not sure how far euro dollar as such has to run. Crosses is a different story, because there we're talking about what's the other currency, what's the liquidity and stuff. But
yeah, well, that leads us nicely into a question Michael's just asked about what we think the euro will be like against the Aussie and Kiwi in the near term, taking into account what we just mentioned about the rebalancing.
yeah.
You probably trade these a bit more than I do, these euro crosses. So against Aussie dollar, you know, again, we've got two central banks hiking. The first and foremost, the ECB will outweigh by sheer size the RBA and the RBNZ, and a lot of other central banks, even the Bank of England. So, you know, what do you think about euro against Aussie dollar and Kiwi? Is it going to act more risk on, or is it going to be more the divergence trades, do you think?
I think for the real point of measure, of course, for the Aussie is looking really to China. If China can reopen, Aussie will rise. If China continues to wrestle in Beijing and only opens Shanghai, question mark. We know that PBOC is on a liquidity injection path, so that's probably holding CNH back from strengthening too much, and might mean a little cap on the Aussie dollar as well. But it's really going to be, does China reopen? If China reopens fully, Aussie should have found its base and go higher. So in that case, since the Aussie has a little less liquidity than the euro, I would say even with ECB hiking, there are chances that euro Aussie slides a bit lower. But as for the time being, that the uncertainty remains, I'd rather say euro will hold its gains, or hold a bit strong against the commodity currencies, and we'll see how China develops. Because as Ryan was rightly pointing out, there is ECB might not hike as much as RBA or RBNZ, but the sheer volume and size of the European economy versus Aussie economy, the amount of money that flows in there is so much bigger that even if the ECB hikes less, it could mean a higher euro. So versus those things, but that will be really, I mean, China reopening, global economy. If we go into recession, euro Aussie, euro Kiwi, euro CAD should actually shoot higher. But we don't know. I think the jury is out on that one.
Yeah, I think it's, if you're looking to trade a currency like that, trade one of the crosses like that, then you have to sort of get a plan and put it almost to the clock or the calendar. So, for example, you know, we can see euro Aussie here, you know, pushing higher. That'll be the ECB, the euro effect at the moment. But if we get a big headline saying China's going to go away from zero COVID policy, and you know they're going to accept that the virus is a part and parcel of life, they're going to reopen up, you know, big positive China headlines, then you're going to see a decent dip in this. You're going to see the Aussie bought against this. So you've got to look at it and think, right, well, if I get that headline tomorrow and I know in 2 weeks' time the ECB is going to hike, what am I going to do with that? Is this a dip that I'm going to buy? Because once that news has maybe had a day or so to be digested, and you see maybe euro Aussie, you know, collapsing down under 149, are you going to think, well, hang on a minute, that might be a dip worth buying because I'm going to run that into the ECB? So that's the way you have to look at it, but it's all about timing. You know, if that China news comes after the ECB, so who knows, maybe we're trading up at 153 or more. And you start thinking, right, well, now the ECB is perhaps a bit more priced in. We've had the June meeting. We know what they're going to do over the next 6 months ahead. Maybe I'm going to start thinking about shorts because there's now going to be noises that China are going to start opening up a bit more. and then you look to short the pair, and it's all about trying to pick which side of the battle you want to fight at any one time, and matching that off against the fundamental or news items that may happen, and how and when they come out, and that's where you get your timing. So on one side you might wait for a dip, on another side you might wait for a rally. So that's how you look at the crosses and match the two sides off, because it's obviously you're dealing with two countries. So and the news that comes out is going to affect either or both, and that's how you try and formulate it into a trading plan. Right, so excuse me. So having another look around some of the other currencies, we're again testing this zone, this support zone this morning, and I'm getting a little bit worried about it now. I've been mentioning that I don't like the price coming back to a level too many times. The highs are getting lower from the bounces off there. It's only subtle, but it's the price action is telling me that things are looking a bit more cautious. And I've actually entered a buy stop, a sell stop in just under 127 at 126.85 now. Fairly tight, got a stop loss on that at 127.15, just in case we do get a break. Because if this pressure keeps mounting on the level, it does increase the chance of a break. And the longer that goes on, then the more volatile a break can be. So I'm just slid in a little trade in there to potentially catch a break. My main concern is around this area here. It's only a little bit of price action, a short-term bit of price action, but that starts around sort of 126.80, 85, and I'm a bit concerned my entry is right on that level. If we get a break of 126 and it's just a little stop flush, perhaps we hit this 80, 85 area, and that's where it bounces. But you've got to pick a level to go in somewhere. I don't want to go down maybe as low as the 60s. I don't want to, if I'm trading a sell stop, you can find levels through this area here, 126.30s. I don't want to be putting trying to break trade of 127 with a sell stop down this low. So I've got to try somewhere. So I'm going to keep it fairly tight on this short try. I'm not too keen for longs off this level right now. But what I'll be looking for, if we do get a break under there, I want to see that as soon as we break down, if we get a retest of this 127 area, I want to see it holding as resistance. If I see that, I'm going to get confirmation that the break is perhaps good. That's potentially where I may add to the position, because I'll have that confirmation, and then we'll see where it goes from there. But I'll be looking at, as much as I think that this could be a good sell opportunity, if it breaks there, I'll be looking to see where the trouble points are. And as I say, round about here, 126.30s, I'll be looking to cut a trade off, take some profit, maybe start bringing the stops down. Just looking at all these little levels on the way down. Obviously, get down to 125, that'll be a fairly decent move, but that'll be the big main level I'll be looking at if we get a break. But that's maybe something that comes, and until it breaks, we're nowhere near. For the moment, it's still holding as support down here, which is still strengthening the level at the moment. It's just in my own head, I'm just becoming a little bit more cautious about the price action here. You got any thoughts on this one, Kay?
Well, I mean, it's bang on, right? I was long of the support level last week. I cut it on Friday up in the high 127s just because it was not holding the 128s, let alone go and test the 129. So I went out of that long. But as you say, it's still the level is getting stronger and stronger, because we dipped down to just below 127.10 and we are trading back at 127.35. I think a lot of sterling yen has been hammered this morning. I was looking at the price action just before starting the meeting and the show, and both cable and dollar yen got hammered same time. So I reckon a lot of sterling yen has gone through today, but forces to admit the level 127 is still holding. We're still in the range. Until then, we have to respect it. I'm selling here is a gamble. It's not a trade idea. Selling here because there might be a risk for something lower is a pure gamble, right?
Yeah, exactly. That's why, you know,
here I'm staying out of it for now.
As we say, a level's a level until it's not. You know, I wouldn't jump in and sell it here at market 127.34 because that's sitting right above a big support zone. But that's why I often trade with buy stops or sell stops if I look for a break trade, because it's low risk. You know, if it holds a support and bounces to 131 or wherever, well, I haven't risked anything. It's only a if something happens type trade. And I don't think a lot of people actually trade that way with sell stops and buy stops. I'm not sure, depending on what territory you're trading. I don't know if a lot of people has access to those types of orders, but it is a way to try and grab hold of moves and break moves and things like that. But I often only do it at big levels or where the price action is confirming that a level is looking really solid. So when you get a level like this that's tested over, you know, many days, you know, it gains strength. You know, when you're marking it down, you know, it gets a high number. Sorry, mate.
Yeah, I said just to add to that, it's like it's equally a nice level for bulls as bears, this 127, because you can buy at 127.10 and put a stop at 80.85, or you can go the other way around. Okay, or you can do both, buy at 127.10 and double up the other way around if it breaks, for instance. This is not trading advice, but it's a possibility of doing so. It's a nice level to trade off, both for bulls and bears in the dollar or yen.
Yeah, exactly. And you know, I don't rule out trying along there. Sometimes the itch gets too much and I have to scratch it, and so I'll try along off the level, and I'll use the sell stop as a stop reverse into a short, and maybe I'll get done on both sides. That's trading, but unless you have a go, you're not going to win anything. So anyway, let's have a look at cable now. You know, it's taken a real big wallop. As I say, we were tickling 126 again today, showing up as a formidable level in itself. But those PMIs really shook the foundations, and the break under 125 even is a bit concerning, because that was a level that we were banging our head on the way up. It was an old fib level. That's what that yellow line is in there. And that was the 61.8 of the where are we? There we go. That was the 61.8 of the virus rally, and it was acting again as a resistance area. So the fact that it's broken back under so quickly is a bit of a concern. And if we find that it starts to hold below here, then potentially we're going to see further downside, and we're going to again potentially see the end of this strong rally that we've seen over the last few days. Obviously, the number's been a bit of a shock to the system. It is coming on top of the sentiment that we've seen from the UK. You know, everything here is doom and gloom at the moment, particularly if you read the press and things like that. It's never as bad as it seems in the press, but you know, markets that are trading it, that's what they read. People who are offshore, that's what they read, and that can be enough to keep the price down and put some negativity and bearishness into the pound. So at the moment, all the hard work has got to be done here again. If we do get a quick move above back above 125 and we start to see it hold, then perhaps we might start to unwind some of the drop today. But I think we're going to be sitting firmly in rally sell at the moment, particularly today, and we'll see what comes out from that thereafter. Euro sterling pushing higher, obviously. Big part to do with Lagarde this morning, as we're talking about. And then the other side, you get the double whammy of the bad UK data. We're still up looking at this 86 level, and this again is my key level. Been watching it for long enough. big fib level of the move from the 92s. We had a try a few days ago, couldn't hold it. Now we're up approaching it again. I'm thinking again, maybe looking at a break trade. If we get above here, this will be a second go at having a go about it. And pretty much what I'm looking at for dollar yen, taking a break of 127. I might be thinking about taking a break above the 86 handle here. It's a different beast, this one. It can suck you into a break trade and then spit you out. I did add to my existing long position when we got this move down to 84. So I was long. I've been long from 83, 83.50, and now 84. So I'm happy to hold this one for a longer term. This is one I'm playing purely on the central bank divergence between the ECB and the Bank of England. For those that may not know, way back when we were up here, I was shorting this for the end of Brexit. And then I was holding it into this year for the Bank of England trade, the expectations, them to start hiking. I was getting out down here, down into the low 83s. And then for the last few months, I've been looking at building along. So I started building alongs at 83. Again, I'm looking for the ECB, the weight of the ECB really, and them to pick up the rate hike baton. And if they do that, and if the Bank of England starts to falter and the economy starts to falter and question marks are put over Bank of England hikes, then this has got the potential to get back up to the, at least to the high 80s, maybe 88, 90. Whether we get back up here, there'll be a bit of a pipe dream at the moment, but this can be a very slow moving pair when it wants to be, but then it can also jump out here and give you a big move. So for me, 86 is the level for me. If we get a break above there, I'm going to be looking a bit happier in my trade, and we'll see where it goes from there. Kay, you having a look at this one at all?
Well, yeah, Euro sterling, I was long inside that lower range, but then I was off yesterday. I didn't want any position, so I can't walk in and it broken up. And I just had a quick scalp in it this morning, but no, I'm not really in Euro sterling position. I am short cable though, as you know, as the people in the room know. I sold it this morning. It was actually meant as a small entry around 125.80, looking for moves up into the 126s cable to add to it, because there's a lot of traffic in the 126 up to 127 in the cable. And then the PMI struck, and Lagarde came on as well, and the PMI struck, and cable dropped a big figure. So managed it a little bit just to take pips, but I'm still looking to resell the cable on the highs, because I do think that, I don't know, towards the end of this month and back into June, we might be looking back at the Fed, and I don't like sterling really. I don't like the politics scene, although the market only trades it now and then, but I don't like the economic data too much. So I think cable rallies are going to find resistance. That's my base view for the time being. And I like to buy Euro sterling on dips.
Cool. And perhaps I should mention the political scene, because I've been mentioning about this Sue Gray report and what's going on with Boris and Partygate and all that sort of stuff. Well, last night, one of the news outlets, ITV, dropped a picture of Boris raising a glass at a supposed leaving drinks, and this has really kicked off again. It's got the whole world screaming about it. Well, I say the whole world here in the UK, which is obviously the centre of the universe. And so that political batton's been picked up again. We're still awaiting this Sue Gray report, but the noise in the press is screaming and shouting that Boris has broken the rules. Why didn't the police fine him for that? And so that political football's blown up again. As I say, it's not really going to be market moving unless we get to the point where he's going to resign, or we start seeing letters of no confidence coming in, and then it's going to be a change of leadership. The market will look at that to see who potentially comes in. Are they business positive? Are they business negative? That's really what the City of London looks at. How favourable is the Prime Minister going to be to the city? and that will be reflected, can be reflected quite largely in people's investment strategies. We've also got this windfall tax that they're talking about. The Chancellor's talking about a windfall tax on energy companies because supposedly they're making so much money. Again, it's a political football. Sunak's ordered a paper to be drawn up on it, probably the pros and cons of the plan. So it's not going for a full legislation or anything like that at the moment, but it's early signs that he's moving to appease the masses, if you like. That's not a positive for the UK. It's a potential cruncher for investment. You know, why are you going to invest in the UK if you make money and they suddenly hit you with a windfall tax? It's not a conservative policy. So that may be weighing more on stocks, UK stocks and energy companies here in the UK. That's something just to keep an eye on. It looks like he's done a bit of a can kick, so he's ordered a paper to review the matter. That'll drop, or that's going to start potentially just as they go to summer recess. So it looks like he's not really in favour, but he's just doing something to appease the masses and kick the can. But that's something to keep an eye on over the months ahead. Right, I don't think there's unless anyone's got any questions. It's a bit busy in markets at the moment. I know I've got some bits and pieces to keep an eye on. I'm sure Kay has too. I'm still long, just for those who may not know, I'm still long euro dollar. I had to scratch an itch, so I was long from the low 104s. I've just cut some more early this morning, 107.18. Going to be yanking my stops right up, and as I've mentioned before, when I get into trades like this, just ride the train, see where it can go. I'm still short dollar Hong Kong, still knocking its head up against the top of the band. Again, for those who may not have watched us before or know about this, the Hong Kong Monetary Authority, they have a band in place for their currency, 7.75 to 7.85, and we've been banging our head up against it. And that's really held itself up there, despite we're seeing a decent movement in dollar yuan. You know, we saw this big drop back in the yuan. Again, news coming out of Shanghai that they're opening up, and that may spread. So you take the theme, the Asian theme, because obviously Hong Kong is now China pretty much. Not seeing so much movement there in the Hong Kong dollar, but it's a low risk trade, touch wood, low cost, no real swap in it. So one I'm happy to sit short in. So that's my position at the moment. I'm giving you a couple of ideas to look at, trades that have potential to make some money while keeping some low risk. What I will do quickly, just do a little bit of a pump before you go. If you do want to come and join us on the ForexAnalytix platform, where we're talking about this stuff all day long, every day, please feel free to join us. If you come via this link I'm popping in the chat here, you can get a 20% discount for the life of your subscription. So if that's of value to you, I believe there's also a trial you can take if you come to the site and have a look. So you want to check us out. And otherwise, we'll welcome you on board. Yeah, if there's anything else going on. Oh, thanks, Gavin. The sun report in the Grey Report is out tomorrow with photos. Good. That'll be something to get the popcorn ready for that one. So thanks very much, boys and girls. Hope you enjoyed the show. Bit of a quick one. Lots to trade. Get stuck into it. I wish you many pips a day. Trade safe, and we'll see you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.